Hello all and welcome to Finominal UK for another portfolio review. In today's review, we're going to be taking a look at AJ Bell's Adventurous portfolio. Initially, taking a look at their investment objectives, we can see the portfolio's aim is to make a positive return over 5 years by investing with a preference towards riskier assets such as company shares and a smaller holding in defensive assets such as cash and bonds. We can see this is quite a popular fund with 1.5 billion of AUM. And in regards to their benchmark selection, they're using the IA Flexible Investment Index. In regards to how we'll be analysing this in Finominal, so I am doing this as a portfolio review, as we do have their holdings as of the 31st of March 2025. So with these holdings, I was then able to take those over to Finominal, where you'll note that I've rebalanced it from the 31st of March 2025 with all those holdings we saw on their statement that we've just looked at. And then I've set another rebalance of the 19th of April 2017 using their ISIN for that, just for that full portfolio track record. Now, just noting on that particular ISIN fund of this portfolio, we can see this is a 4-star rated fund within the IA Flexible Investment Index, and these are Finominal's own star ratings. So certainly quite a strong star rating, I'll note, though not quite a 5-star rating within this universe. Now, as noted, we can use the IA Flexible Investment Index as the benchmark, as we can see on the asset comparer here. However, I think a more appropriate benchmark for this analysis would be a composite of 90% FTSE All-World and 10% global aggregate bonds. As we'll see, the assets split is roughly 90% global equities and 10% fixed income. So with all of that noted, I'm going to head over now to Finominal's Portfolio Analyzer, where you can see I've loaded in the benchmark of which I've noted, and we can also see the suggested benchmark there, as it has got a slightly higher R-squared than the benchmark that I have selected. But let's initially look to the portfolio's holdings. So we've got 18 holdings in totality here, where we can see State Street's Spider, S&P 500, UCITS. Also see FTSE UK All Share, Emerging Markets ex-China, Mundi. I am noting quite an overlap in holdings here. So UK Equity All Cap with Mundi, FTSE UK All Share. So just a manager spread is what I would note. So diversifying across managers. If that's to be noted. So 18 holdings there, but let's continue now. Initially looking at portfolio benchmarking, where we can see the total fees for the AJ Bell's Adventurous portfolio is 0.31% versus the benchmark's 0.13%. So still certainly on the cheap side, I will note, of 0.31%, though not as cheap as the benchmark we've made. Total return 118.63% versus the benchmark's 140.13%, so an underperformance there against that. Compound annual growth rate of 9.5% versus the benchmark's 10.7%. We have seen slightly less volatility though for AJ Bell's Adventurous portfolio with 12.5% versus the benchmarks of 12.7%. Though this does come with a higher max drawdown in AJ Bell's Adventurous portfolio at minus 25.44% versus the benchmark's 23.55%. And then we can also see a lesser sharp at 0.59 for the AJ Bell Adventurous versus the benchmarks at 0.68. If we look here, we can see that underperformance against the composite benchmark of which we have created here as well, where I'm going to continue now. I'm going to head over to asset classes and markets, where we can see, as mentioned, 89% in equities versus showing 87% in equities for the composite we have created, though that is noting a sliver in cash as well. For the benchmark, looking at fixed income, we can see 8% in the AJ Bell Adventurous and 2% in cash as well. So quite pleased with that benchmark choice, I will note. That is on a holdings-based basis. If we toggle this to risk-based, we can see for AJ Bell Adventurous, majority of risk has been attributed from equities at 68%, 4% from commodities, 2% in equity factors, and then 26% in unexplained idiosyncratic risk there. Let's continue now. We can see this is mainly comprising of large cap funds. As we can see, 75% in large cap, with 16% in mid and 10% in small, again, which is very comparable to that of the benchmark we selected, with 80% in large, 13% in mid, and 7% in small. Looking at countries, we have got a bias to the US, with 37% holding in the US, followed by 21% in the UK, and then 7% in Japan, 4% in Switzerland, and we can see the residual amounts here accordingly. That is to be noted, does have less exposure to the US than the composite benchmark we have made, with the composite having 58% in the US, and the composite also having a much lower allocation to the UK at 4% versus 21% for AJ Bell Adventurous. Let's look now to sectors. We're going to scroll down to sectors versus benchmark differentials, where we can overall see a bias in information tech at 25.1% and financials at 16.1%. That's going to mainly be attributed to the US and UK biases there. So nothing I wouldn't expect to see there. Also, we're seeing an underperformance, a negative difference in information tech versus the benchmark, but again, that's going to be due to the lesser exposure to the US. And we have also got 8.4% in consumer discretionary as well. Going to continue now, looking to risk analytics. We're looking to risk contribution. It's interesting to see 3.4% of risk attributed to Australia, with 67.8% attributed to the global stock market, so MSCI ACWI index. Also 11.5% to the UK, and we have got 17.4% in idiosyncratic risk as well. Going to move over now to drawdowns and scenario analysis, where I'm going to go over to scenario analysis with actual returns. We can see during the 2022 market sell-off, we did see lesser drawdowns of -4% in AJ Bell Adventurous versus the benchmarks of -9%. Though during COVID 2020, we did see deeper drawdowns for AJ Bell Adventurous at -19% versus -17% for the composite. Though in the market sell-off of 2018, we would have seen deeper drawdowns in the composite benchmark we have created. Now, it'll be interesting to see how this portfolio may have looked during the GFC. So using factor exposure analysis, let's replicate those returns, where we can actually see AJ Bell's Adventurous portfolio would have seen much deeper drawdowns of -30% against that of the composite benchmark, which we created at -20%. Going to look now to fee reduction, just how we can optimize this particular portfolio for cheaper funds. So a very handy feature we have at Finominal, where we can see we can reduce fees from 0.31% to 0.07% for the optimized portfolio, and we can see the performance there shown as well. If you did want to save that to your dashboard, simply press the save icon there. But let's move now to return prediction. So using the capital markets assumptions of very large and well-known providers such as BlackRock, BNY Mellon, JP Morgan, and so on, the expected annualized return for AJ Bell's Adventurous portfolio on a base case scenario is 8.95%, pessimistic 5.81%, and optimistic 10.73%. So it's forecasted for high expected annualized returns over the next 10 years above that of the composite benchmark we have made. So that is to be noted. But let's move now to portfolio simplification. Can this portfolio be simplified from 18 holdings? As we can see, it can be with 4 securities shown here. Again, we can save that to the dashboard, but it's handy to see that insight really. So we're looking at FTSE All-World Index, MSCI, Emerging Markets, Euro Stocks 50 pounds hedged, and FTSE 100. If you want to see those exact stats against each other, we can see these accordingly. So we've just seen a higher CAGR, lesser fees for the simplified portfolio. Higher volatility though for the simplified portfolio, as well as a higher max drawdown, but that has come at a slightly higher Sharpe over the periods of which we're looking here, which is from where we're looking towards the end of April 2024. But I will say, I'm going to bring this back over to the asset comparer now. I'm going to look at statistics, where overall it is a relatively positive analysis for this particular portfolio. It has got a four-star rating for the individual funds. But against that, over the composite benchmark, we have made 90% FTSE All-World, 10% global aggregate bonds. We have seen a higher Sharpe ratio for the composite we made, higher compound annual growth rate, a lesser max drawdown, and also at a cheaper total fee as well. But I do hope that analysis was helpful and informative. And of course, if there are any other funds or portfolios you'd like me to review next, please let me know in the comments. But other than that, please like and subscribe, and we'll see you all in the next one. All right, thanks all.